Good evening, everyone. Good evening. Good evening even to N7 Kev. I thought it was Kevin7. I think he's got a little bit of an identity crisis going on. Probably comes with him being such a shill for Sony all the time. Who knows? You know, anyway. Happy Wednesday, everyone. We're back with another Mortiel Fallacy, and we are going to talk about the most interesting topic tonight that I swear is not going to put everybody and their grandmother to sleep. Yeah, good times. Let's get the browser off the window there for a minute, because we're not ready for that. Anyway. Yeah, Kevin7, yeah, because no one else has ever thought to take that before. Meanwhile, Sony loves us. They kept the PS4 affordable and gives us manageable amount of good games for our console, while PC port beggars get nothing but shovelware and eventual console ports. How's Monster Hunter on your $12,000 paperweight? Ho 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 ho. I'm a pony, and I like to listen to Genuine's song Pony over and over again. My name's Kevin7. You'll DK that bra then. that name actually sounds better. That actually does. That sounds better than that bra you DK. Because your name as it is, DK, it doesn't make any sense. That bra you DK, it just doesn't make any sense. But you DK that bra. You DK that bra all fucking day. Yeah. Anyway. I don't even know. So tonight we've got a yeah, exactly. Yeah, Oregonated. That name, Oregonated. That bra can't Oregonated anywhere. Alright, so in any case though, tonight we've got a very serious topic. No, it's actually mostly centered around the fact that recently I just saw a slew of tweets and articles written and all this stuff talking about the earnings call from EA and talking about Battlefront 2 and about Anthem being delayed into 2019 and all of this stuff. And I got the feeling, I got this distinct feeling from that all those tweets that I don't think people really know what an earnings call is all about. Nor do they really understand why there's an earnings call. In fact, most people don't realize that EA is legally required to provide that earnings call. It's not something they just do for shits and giggles. They're actually required by law to do that. Little known facts on there. But so tonight, Morty soapbox. Yes, Dropkick said soapbox. Guess what? That soapbox is welded to the ground. So now you just made a fool of yourself. What? I need that. I need to start actually having like a radio show only in an audio visual format. So I need to actually start incorporating GIFs into my OBS thing so I can hit a button and play the GIF of Obama dropping the mic. And that would just make it better. But so tonight, as we're drinking out of our wonderful Sugar Skull mug, this is actually me drinking the brains of small innocent children and little animals and all of the things that would offend people. Coffee is so good. Super Zen going. Yes. So where we're going to kind of start is we're going to kind of start explaining what a public company is. And this is going to kind of come into why EA is making the announcements they are, so that you guys can kind of get a better understanding of what motivates a lot of these actions that you see companies like EA doing. And we have a very, very interesting way we're going to go about that. But first, let's start at the top here. Let's start with the first thing. What's a publicly traded company? A public company, a publicly traded company, a publicly held company, publicly listed company, or a greedy, evil corporation known as EA, you know, they're all interchangeable names, is a corporation. And just to define, a corporation is essentially a company where a group of people are legally allowed to operate as one entity. So that's essentially if you have 5 people who incorporate their idea, their business idea, they are legally allowed to operate as a single entity under law. In other words, they can file taxes as that company, they can, you know, earn money as that company, they can do things as that company rather than as themselves individually. So but a publicly traded company is a corporation whose ownership is dispersed among the general public in many shares of stock, which are freely traded on a stock exchange or in an over-the-counter markets. In some jurisdictions, public companies over a certain size must be listed on an exchange. A public company can be listed, a listed company, or unlisted, as an unlisted company. It began with the East Empire, or good God, the Dutch East India Company, way back in the day. That was obviously what you guys know. Most of you will know the Dutch East Empire Company from the Pirates of the Caribbean movie, which of course is a completely accurate historical retelling of events during that day and age. So you guys can completely trust that everything in those movies is 100% accurate. I bet you that cup is made from blood diamonds. No, this cup isn't made from blood diamonds. I don't get anything this intrinsically without any value whatsoever, and diamonds are intrinsically valueless. The only reason why they have any value is because the De Beers cartel holds a monopoly on all diamonds manufacturing, collection, and sales throughout the world, and they charge whatever they want for it through artificial scarcity. I prefer skulls made out of small children or animals, because that's really the only thing that could fit in this size of a mug is a small child or animal. Maybe an alien. Small alien? Yeah. So, in any case though, why we're talking about a publicly traded company is because what publicly traded companies, how they work is that they're essentially a company where their ownership is not, they're not owned by a person, right? So EA doesn't have a singular owner. EA has thousands of owners. Thousands of owners, because, and we'll get into how that's determined in a moment. But the main advantage of a publicly traded company, which what we're getting into here, publicly traded companies are able to raise funds and capital through the sale in the primary or secondary market of shares of stock. This is the reason publicly traded corporations are so important. Prior to their existence, it was very difficult to obtain large amounts of capital for private enterprises. The profit on stock is gained in the form of a dividend or capital gain to the holders. And essentially what that means is a dividend is, and we're going to discuss it in detail, a dividend is where the company actually pays the stockholder a percentage of the profits, and a capital gain is essentially where you sell the stock, you as the stockholder sell those stocks for a profit. So, and we'll also discuss this, where you buy a stock for a low price, it raises in price, and you sell it at that higher price. The amount of money that you make in the difference there is what's known as a capital gain. If a stock was higher and you sold it at a lower price, then that's what's known as a capital loss. By the way, guys, this is Stock Markets 101 apparently now. So dividends, this is kind of an important part here because this plays into what we're going to be getting into very soon. A dividend is a payment made by a corporation to its shareholders, usually as a distribution of profits. When a corporation earns a profit or surplus, the corporation is able to reinvest that profit in the business, called retained earnings, and then pay a portion of the profit as a dividend to shareholders. The reason why we're talking about dividends on here is that dividends are essentially they're the bait that lures in shareholders. So obviously people buying stock on EA, for example, are buying it for one of two reasons. They're either buying it because they want to earn a dividend, a percentage of the profits from that, or alternatively they are doing it in the eventuality of selling that stock again for a higher price. And both of these will go into kind of what we're talking about in a moment. So real quick, we're going to discuss a few things on the share pricing of EA, and this is kind of going into the major overall story that we're going to talk about after this. So this is EA's lifetime stock prices. This nice little chart here from 1989 to 2018. Yeah, so this is their entire stock price. If you would have bought their stock when they went IPO, when they made their initial public offering, it was 45 cents per share. And now it is their share prices are at about 115 as of 4 days ago, which that's not actually their stock is up considerably from that. Their actual stock is 126 now. So. In any case, though, 126 from 45 cents, that would be a pretty good increase there. So here's the thing, is that where this plays in here, we have a couple of things. So when you actually see market cap listed on these guys on here, and you see it's $39 billion market cap. What a market cap is it's essentially the share price, which is 126.96 here, and that's times the amount of people that have bought stock in that company. That's considered the market cap. That's actually how many shares are currently in the wild, if you will. Now, what this whole thing, this whole publicly traded company and dividend and payments and that sort of thing has to do with any of this is actually, if we were to look at their 5-day trend here, and their earnings call was yesterday, was the 30th, right? So you'll notice that it was sinking kind of at 115 or so. You'll notice that the 1 month trend on here, it was 109. They were still slowly recovering from the Battlefront 2 thing. If you'll notice that right around that late November, early December time, they peaked at an all-time low. They actually hit a pretty low spot. This is probably the lowest their stock had been in a while. So they were at 100. The last time they got down that low was, yikes. So that was May was the last time their stock was that low. Now, the reason why I'm bringing it up, though, is that you'll notice in the 5-day trend, their stock is just kind of waning here, and then all of a sudden, boom, their stock jumps $11. $11 between January 30th and January 31st. What happened that day? Well, a few things. Most importantly, though, they made their earnings call. Their earnings call pretty much saying, hey, this is how we're doing as a company, here's our future plans, so on and so forth. And you can see from here, something happened in that earnings call that really interested investors, because why this jump happened is because a bunch of investors bought stock in EA, right? They bought shares into the EA company as they're a publicly traded company. So something monetarily really interested EA, or really interested in the investors in EA. And then you get a nice story from MarketWatch, which is not a gaming news publication. Mind you, this is actually an investor publication, so keep that in mind. The hard-hearted realities of investor demands on quarterly results determine when a video game publisher, Electronic Arts, releases new titles such as the forthcoming Anthem, not when the product is actually completed by developers, executives said Tuesday. After a report last week of months-long delay for the EA key EA title Anthem, originally set for release in fall 2018, executives admitted Tuesday that the game will debut in early 2019 instead, but it was not due to delays in the development of the game. The real reason? The company determined the game launches by numbers, a measured calculus on the top of and bottom line. Gosh, I can't read. Ugh. And the ability of EA to meet expectations that Wall Street and investors set for financial performance. We've chosen to launch Anthem in Q4, and the date is really determined by portfolio balancing considerations, not for project readiness reasons. This is a very hard to understand sentence for a lot of people who are not in the investing know. What they mean by portfolio balancing considerations is that they have, for a company with periodic releases, like a video game company, a movie production company, or something else where you are not constantly doing business, you have spikes in your earnings. You typically, when you're being smart about things, you will release your content in a steady pace over the course of your business year, so as to make your earnings look more balanced throughout the year. A lot of stock markets do not like the I think they have a couple of names for them that I can remember offhand, but turn and burn, or or the slightly less politically correct hump and slump name that they had for them. In any case, those are all based upon the idea of essentially you get one big payday out of a year, and then shortly thereafter, all of a sudden your numbers go down considerably because magically you're looking at another big production that's going to take a year, so you're not going to see it this year again. So say they released Battlefield 2 is the only game in 2017. Bam, that's 9 million copies sold at $60 a pop. So my math is really horrible, but say that's $540 million. I think that's rough guesstimate. Not even right, or is that 54 million? No, $540 million. So rough guesstimate, they sold 9 million copies of Battlefield 2, $540 million. Bam. That's all they made for that year, $540 million in the last month of the year. The first 11 months out of the year, they were earning $0. That's not a very stable ecosystem for a business, especially a publicly traded business. So a lot of investors won't like that. The key is stability. They want that stability. So whenever they're talking about portfolio balancing reasons, they're actually talking about a mistake that they made in the past. Most people won't realize this. They made a huge portfolio blunder with the release of Titanfall 2 a little ways back, a year or 2 years ago or so. And essentially what happened is that they released Titanfall 2 right before or right after they released Battlefield 1. I can't remember which. They essentially released Titanfall 2 right in between Call of Duty, I think it was Infinite Warfare, and then they released it right before Battlefield 1, I think is what it was. Essentially, they just completely gutted it. Like, there was no chance for that to really see its maximum earning potentials. So a lot of the profits that could have been earned from that were wasted because they didn't balance the portfolio properly. That's what they mean by portfolio balancing. Had they waited a few months and released the Titanfall 2 in the late December, early January, maybe in the February, if they were pushing against the Mass Effect Andromeda timeline, they would have probably saw a lot better earnings out of that game than they did, because a lot of people, the initial flare of Battlefield 1 would have wore off by then, and then they would have seen some people reinvest back into Titanfall 2. The problem is what they did was they released Titanfall 2 and Battlefield 1 right next to each other. Both rely heavily on your PvP they both rely heavily on PvP environments, and they both are essentially first-person shooters. So as a result, they're marketing to a lot of the same audience, and that was kind of a mistake. Now, here's what the part that I don't necessarily see as being really well communicated in this. They're required to be fairly honest and upfront for the most part with their investors. They can spin things a little bit to try to make things seem a little bit more positive, but for the most part, if they lie to investors in these earning calls, they can get in a lot of trouble. If you remember what I said, that those earning calls are required, that's actually based upon, I believe, it's on the Securities Act of 1934. The Securities Exchange Act of 1934 is this one. Let's see. I don't actually know if it actually says it on here directly, but there is actually a legal requirement under that or the Sarbanes-Oxley Act that actually require, oh yeah, there it is. Various, yeah, here we go. Many stock and change are regularly audited. Various annual and quarterly reports are also required by law. Yeah, so essentially though, if they lie in those earning reports, they can get anything up to sued or investigated by the SEC, the Security Exchange Commission that's part of the Senate. You don't want that. That is essentially being investigated by the SEC. The problem with that isn't necessarily that they'll find wrongdoing and maybe fine you or some such. The problem is what that does to your image. As a publicly traded company, be investigated by the SEC for, say, securities frauds or something like that, that usually is a death knell for your company's stocks. They will plummet. Now, what does that mean? Whenever you hear, like for example, when we're looking at their share prices here and we see their stocks really go up or their stocks really go down, what does that mean exactly, right? Well, what most people don't realize is that when you're talking about a publicly traded company, one of the main ways they have market capital to do things like make games is via people buying stocks. That's why you'll see, if you look at their overall max, you'll notice that it does go down. It goes up and down, and it's had a few hits, like most notably back in 2008, which is when we saw a turnover in the CEO of the company. I believe this is whenever Andrew Wilson actually took over as CEO again. Or no, yeah, excuse me, I think that's when Andrew Wilson became CEO. I may be wrong, but you'll notice that it kind of squandered down here for a little bit, and then all of a sudden we saw this meteoric climb and little dips here and there, but overall it has been just skyrocketing. It's up to, like I said, 126 now, whereas just a few years ago it was at $14. It went up over $100 per share. Well, what does that mean? That means that that if you remember when I was talking about the market cap and why I was making a comment about that. So what a market cap is, like I said, it is the share price times the amount of investors. So if you have this share price and people assumingly are buying at that share price, which they may not have, they may have bought it for $14 a share. But if they have bought it today, they have $40 billion that people have invested into that company. Assuming that every game they release breaks even, they would have $40 billion to spend into their budgets. So that's $40 billion for, and this is over the course of their lifetime as a company, right? So it's not just right now they have $40 billion in a vault, as I joked with Tucker from Bioware Follower, that they have a bunch of gold in a vault like Scrooge McDuck. No, it's not that they have $40 billion outright. It's that over the course of their company's life, they have earned $40 in capital for their investments. Where this comes into play is that this is mainly the source of their investment dollars for R&D, research and development. Research and development spins into game development. Game development turns into games. Games turn into sales, which sales figures, positive sales figures, and good media press turn into more people buying stock. More people buying stock means more money invested in R&D dollars. More games development, more games, more profit. The thing is that the profits for a publicly traded company for their actual goods being sold are not their real source of revenue. The real source of revenue is actually in their stock sales. And that's something that most people don't realize. When they see an announcement like this, they get up in arms. They get up in arms when they said, oh, it's not for project readiness or product readiness reasons. We're not releasing it because even though it's probably going to be ready, we're not releasing it because, we want to balance our portfolio. It's to benefit investors. A lot of people get angry at that. They don't realize that the reason why Anthem is being developed is because people bought stock in EA. And EA had that company to make Anthem. It's not to say necessarily that's a good thing, however, as I've been kind of pointing out a lot recently, that this type of system where you are reliant on people buying stocks into your company means that you're unfortunately not able to really focus on the creativity aspect of the game, because you have to consider these aspects like portfolio balancing. It's not an option. If you don't balance your portfolio, if you don't appear like a steady company, no one's going to buy your stock, and you're not going to have that capital to invest into games development. Now, whenever you make a profit off the game, I don't know, I wasn't able to find clear information. It doesn't look like the EA has paid out a dividend, which is why we don't see a dividend yield listed there. So they may not pay back a dividend to their investors, which is something they're able to do. A dividend is not required for publicly traded companies. However, if they do pay out a dividend to their investors, that means that, like, essentially when EA makes money back from game sales, they keep a chunk of it for themselves to cover operating costs and maybe a small portion for ongoing research and development, essentially capital expenditures as they're called, which are usually rolled off in it's a very large purchase that gets made that usually gets spread out over the course of several quarters or maybe several financial years, depending on how they want to try to mask it tax-wise. For example, whenever EA just recently bought Respawn Entertainment, that is called a capital expenditure. So while that costs several $1 billion, I think, or something like that, it was pretty pricey acquisition. That was not necessarily all paid up front in their actual earnings report to investors. It was usually probably rolled over several quarters. And that's something that they might keep sales, like profits from a game. They might keep some of that to continue paying those capital expenditures. And then the rest will get paid out in a dividend to the stockholders, who, depending on how many stocks you have in them, depends on the dividend that you get paid. The thing is that typically when you pay a dividend, your stock prices usually take a little bit of a hit afterwards. So if you'll notice on here, and this makes me think that there may, and it's tough to say what's a dividend payout and what's a, just natural fluctuations in the market. But if you notice, like, the market typically up and down all over the place. Some of these could be theoretically from dividend payouts, where you see a chunk of their profits go. Like, for example, this big dip right here could have been from a dividend payout, where it went from $69 to $59 in the course of a month. And that coincidentally looks like that was also right at the end of their fiscal year. So that's entirely possible that that was a dividend payout. I don't know if that's the case or not, but that's how that system would work. Here, this is the major thing, that whenever you read stories about EA's earning calls, or I don't know if Ubisoft is publicly traded. I think they are. Pretty certain that Ubisoft is. Take-Two Interactive, Activision, Activision Blizzard. Those guys all make annual earnings calls. February 7th and February 8th are when Take-Two and Activision do their annual earnings calls. Same thing as EA, and they'll make similar such statements about, hey, this is what we have on the roadmap. They're essentially what earnings calls have turned into is advertising lines for investors. Here's what we have going up. Here's what you can expect. And it kind of gives a lot of investors a roadmap on when to invest into the company. Do they want to do it now? Do they want to do it later? It also gives them a measure of stability in that company. Does that company have a stable plan? Are they just releasing stuff whenever they feel like it? Or, oh wait, they're balancing their portfolio carefully in order to maintain a year-round profit gain? That's good. So whenever you see announcements like this, you have to realize that with a lot of your AAA publishers, like EA, like Activision, like Take-Two, these companies, you have to realize when you're buying their video games, you're really not their main consumer. As in, you are not the main one paying their bills. The main one paying their bills is Johnny Q investor on Wall Street who's buying their stocks. That's really where they're making a lot of their actual gain dollars so they can invest into making the video games. That's most of the money that's getting paid to the developers in order to make it. This is something that's not very well understood, and it's very tricky to get hard figures on a lot of stuff outside of these earning calls. One of the problems that I have with a lot of these earning calls is that they never disclose any transparency in the actual earnings breakdowns. We never hear anything about how much money it costs to make certain things with a video game. Like, for example, we'll never hear the actual budget of Battlefront 2, specifically from EA. We'll never hear the budget of, except for rumors or slight anecdotal evidence, of the specific budget breakdown for Mass Effect Andromeda or any other game that's made by EA, because talking about how much something cost is actually bad for investors. Investors don't like when you talk about how much something costs. They only like to hear about how much money you're going to make them. And that's what you have to take away from these calls, is that they're all about how much money the investor can see from buying stock in EA. They're a sales pitch. And that's, even though they're honest, by law they're required to be honest, but you have to realize that they're being honest in a way that makes them appear to be a good company for investors. So that's kind of the moral of today's story and what I wanted to talk about on here, because I kept seeing all these tweets and it was driving me batshit crazy, and I was like, ugh, yeah. Anyway, so that's kind of the short little bit I had today on the Mortiel Fallacy. It was a little bit shorter than my usual streams, but I don't think that's necessarily a bad thing, because these were originally intended to be like 30 to 45 minutes long to begin with, and I just learned how to rant, I guess. In any case, though, we're going to kind of get closed down here for the night. I did want to just kind of tell everybody how things are going from here. So if you noticed on here, we're obviously restreaming this again on all platforms, and we're going to continue to do that, so to speak. So the game stream on Monday that you guys might have seen on my begin card or end card that I have up there, the game stream is actually going to be live streamed to the Pixel Crashers YouTube channel, to the Pixel Crashers Mixer channel, and here on Twitch to the Pixel Crashers Twitch channel, right? And then my Mortiel Fallacy will be streamed here on the Pixel Crashers Twitch channel, okay? And then on my YouTube channel and my Mixer channel. So that, well, at least that's my theory on that. In any case, that's kind of the plan I have going forward. I may switch the Mixer channel up because I don't know, there's no real point to having 2 of those. Those are really ultimately for Xbox players anyway. I don't know. Yeah. So we're going to go ahead and get closed down here for the night, guys. Let me go ahead and pull up and see if we have someone fun that we can host here tonight who's not talking about boring earning stuff. Oh, isn't that always fun? I know you guys love talking about money and stocks and all of this boring, dry monotony of nonsense. Yeah. Anyway, looks like Anchor 654 is currently streaming some Witcher 3, which, by the way, is not made by a publicly traded company. It's made by a private indie game developer called CD Projekt Red. Fun fact for the game. Anyway, we're gonna go ahead and get closed down here for the night, guys. So it looks like tomorrow night at 7 p.m. Pacific, Kev the Gamer is going to be streaming here on the Pixel Crashers channels. So definitely come check him out. It's gonna be awesome to get our second streamer set up here. Make sure you give him a bunch of shit and call him a scrub for everything he does, because you know he's a console fanboy. So you know, you gotta make fun of him for all of that, I guess. But we'll get closed down here. We'll come back tomorrow night for Kev the Gamer stream, or Kevin7, or whatever his name is this week. I can't get them all right. I get confused easily. And then we'll be back on Saturday for a Pixel Crashers party, where we'll probably be streaming some game. I hope it's Rainbow Six Siege, because I've been having a lot of fun with that game. But if not, we'll figure out what it is. So we'll get out of here for the night, guys. Guys, have a good one, and we'll throw a host over to Anchor 654. Guys, go say hi to her. She's a super cool person, and yeah, fun times. Guys, have a good night. We'll see you later.